Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 30th September 2024. The deadline to submit the income tax audit report has been extended to October 7th, 2024 for those taxpayers who are required by law to conduct an income tax audit of their accounts and submit the audit report on or before September 30th, 2024. The report is required to be submitted online on the e-filing ITR portal. This extension is important as the penalty for submitting a tax audit report after the deadline is Rs 1.5 lakh or 0.5% of total sales, whichever is lower. Electric vehicle sales are rising globally due to policy pushes and stricter emission norms, but hybrid vehicles are gaining popularity faster. Since 2021, hybrid sales have surged in China, Japan, Korea, UK, France, and the US. India has also seen a slight increase in hybrid penetration despite fewer models available compared to electric vehicles. Banks in Mumbai are facing challenges with identifying ultimate beneficial owners or UBOs of foreign investments due to varying disclosure rules across countries. Banks handling foreign direct investments into local companies and overseas direct investments by Indian investors venturing abroad vet the last natural persons behind the larger shareholders of the investing entities. But in several cases, they are unable to peel off the layers to spot the real persons at the peak of what could be a multi-layered investment structure, primarily due to less demanding disclosure requirements in several countries. This issue has been discussed among senior bankers who believe India's anti-money laundering laws should adapt to different international standards to ensure compliance and transparency. In order to align the listing timeline in case of public issue of debt securities and non-convertible redeemable preference shares with that of non-convertible securities issued on private placement basis and specified securities, SEBI has decided to reduce the listing timeline in case of public issue of debt securities and non-convertible redeemable preference shares to T plus 3 working days from existing timeline of T plus 6 working days. Further, to ensure ease of compliance for issuers, the listing timeline of T plus 3 working days is introduced as an option to issuers for a period of 1 year and on a permanent basis thereafter, such that all listings occur on a T plus 3 basis. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.